Good morning, everybody. Welcome to the Monday Morning Market Review with GoPro Trading and yours truly, Ian Giffen. And trust you guys are having or have been having a good time trading since last week, Wednesday. We obviously had our brief midweek catch up on what was happening in the markets in anticipation of the FOMC announcement of their interest rate decision on Wednesday afternoon, their time. And as anticipated, there has been a lot of action since then, as I'm sure you will agree, uh, across many of the instruments that are affected by the US dollar and any decisions around their economy. So we never second guess the markets. We always wait for the market to prove itself before we do anything. If you're trading a more conservative approach, then you're still probably waiting for more to happen. And likewise, also with the higher time frame strategies such as the daily impulse, there has been very little to do, mainly because a lot of the action that took place post the FOMC announcement was reversal in nature. So we normally need to wait for some cyclicity to develop. It is true that many of these sudden moves that result from uh, an announcement of some type at a fundamental level resolve themselves quite quickly. So the markets can find consensus relatively quickly and not go anywhere else. So uh, you need to differentiate very often between a market that establishes a consistent trend over a longer period of time and those where there's a sudden move and then quickly finding consensus and balance in the market again. So the more conservative approach that I've been talking about over the last couple of weeks looks to see that there is a more consistent directional bias established before looking to position oneself, because that's the nature of those strategies, is to take advantage of a consistent bias in market direction. We don't yet or haven't yet been given a chance to evaluate whether that is the case. Certainly not on the daily time frame. But it has been interesting, and it certainly has provided opportunities for more aggressive traders on the lower time frame. So certainly the H4 impulse, particularly if you haven't needed to have an outside C close on a higher selection time frame, uh, which is something that you may have chosen to do on your personal account as opposed to the your funded account, has provided a lot of action. And similar to what we saw last year when the COVID crisis broke, well, certainly the early part of that, there was just a lot of money to be made very, very quickly, a huge amount of money, in fact. So you can even see with this trader's personal account risking about 1% per trade. They're up around, I'd say, about the 30% mark already, just on H4 impulse trade. So, but that's not the point of this. The main point for us today is to have a look at the currency pairs that we do trade and see if there are potential opportunities for us in the week ahead. So here, as always, here we are on the Euro USD. You can see that dollar strength pumping through there through the latter part of last week. And certainly there are a couple of opportunities to trade H4 impulse, also the H4 hybrid, something that I discussed with a couple of you guys last week. You can see there was a trade. And if you're using advanced targeting, you're actually still in this trade. So quite significant when you look at an initial risk of, I think it was around 37 pips, somewhere around there, and currently sitting at about 230. So big reward to risk ratios. You guys have seen this in the past when we've had big market movements. The fact of the matter is we don't know when they're going to happen. We just need to be able to position ourselves using an appropriate strategy that allows us to limit downside and maximize upside. So when that upside does transpire, we can capture it. All right, so you can see that even right now, we don't even have an outside C close on this. Looking for a bit of a pullback on daily, and we can go from there. So similar picture on GBP USD, as you can see. So this is some advanced targeting going on with this trade, it would appear. So a bit of a pullback, typical Monday morning activity, but we don't know if that's going to lead to a more extended pullback through the course of the early part of this week, after market participants had a chance to collect themselves over the weekend. By the way, I hope all the dads had a great Father's Day yesterday, and those of you who've got dads, spoiled them rotten, fed them lots of beer, wine, or preferably whiskey. Dollar yen here on the daily time frame, you can see that we did have that initial breakout, but it pulled back inside of the channel. So that immediately is something that disqualifies us for most of our trading. Technically still a trend. We haven't yet had a breakdown in the sequentiality of or potential cyclicity with that breakout. If you wanted to look at this at a fundamental level, when you have both the US dollar and the Japanese yen strengthening together, typically that's a risk-off trade. It means that the market is looking for safe haven type instruments. So not sure if that's entirely the case here, because obviously the market is anticipating interest rates in these economies going up sooner than expected, even though it might still be like 18 months out. But nevertheless, it is a very similar type of behavior to when there's a major crisis, economic crisis, where the market participants rush to safe haven type investments like US government bonds and so on. All right, so dollar Swiss, inverted picture really of Euro USD, or similar in any case, also been very tradable. Some nice trades on this on using obviously dailies of selection time frame. And yeah, I'm sure if you have done that, then you will be in some trades right now as we speak, or a trade certainly on that. USD CAD. So here we can see a picture of on the weekly time frame of the not yet a reversal in terms of cyclicity on weekly, but certainly a close back inside of the weekly channel. So this is no longer a strong trend. And of course, if you drop down to daily, it was a very significant breakout. We spoke about this in an early opportunity to trade this, in fact, even before Wednesday's announcement. And this trade, of course, is also significantly long on this on an H4 impulse. So very strong bullish move. In fact, even not even suffering as much, I don't think. Let's have a look at H4 from the Monday morning pullback as some of the others. So yeah, you can just see using advanced targeting. This is a variation on the advanced targeting that the trade manager uses, whereby you have the option of continuing to use the 3-6 rule after a certain point, something that we're going to be getting into in our training in the bootcamp that's coming up in 3 weeks' time. Hope you guys are looking forward to that. Right, so that's the USD CAD. Aussie, another very significant bearish breakout with that US dollar strength. And I think this is certainly possibly the second H4 impulse. Yep, you can see here. This one, maybe, I'm not sure if this trade is using advanced targeting or not, but certainly you can see that the initial trade hit its take profit on the H4 impulse. That one's obviously off the table. So yeah, I'd have to chat to the trader to find out what their intentions are for some of these trades. Similar picture with the Kiwi. All very similar with these very strong bearish, US dollar strength showing itself across the board and giving us very strong breakout. So this one you can see if you're trading H4 impulse, you would have had two consecutive winners with standard targeting, would have just hit take profit on Friday. But clearly this must be an advanced targeting approach as that trade was not taken off of the table. So I assume the Aussie one is similar. Right, so moving to our yen crosses here, you can see similarly yen strength, as I mentioned before. So euro yen, strong bearish breakout, lots of opportunity there. But just to reiterate, now that we're on the yen pairs, you guys know we've had strong bullish trends on the weekly time frame for quite some time across the board when it comes to the JPY pairs. So Friday almost closed inside the channel in the previous phase 2's price territory, but didn't. Succeeded in remaining outside of that. So far today, well, we'll have to wait and see what happens during the course of this week. But it is nevertheless now still very much a bearish phase 2, and a very strong one at that. We were talking about the quality of waves last week, where we're talking about the quality of phase 1 waves And although this is a phase 2 wave, it would count as a high quality wave because we've got two bearish impulse candles in a row. So 2 out of 3 of these candles over here being bearish impulse candles is more typical of a phase 1 wave than a phase 2 wave. So phase 2 waves being typically weaker with a much lower incidence of impulse candles. And that's something that would surely need to be a warning sign for anybody wanting to trade against that. So if you were trading continuation type strategies, and not many of you do on this time frame, of course, then that would definitely be a something that would be either a warning sign or possibly even something that you have included in your trading plan and your selection criteria. But on the daily time frame, it's definitely tradable in a bearish direction, no question about that. And I'm pretty certain that if you had been trading this on an H4 impulse, you would have quite possibly had 2 winners on this already with standard targeting. So obviously, this trader being careful about the risk budgeting. You can't have everything on the table at the same time. So GBP yen, this one also Monday morning activity, strange volatility, but it's pulled straight back again so far. Let's wait and see. But yeah, it's certainly one of those which is still overall very strongly bearish with that bearish breakout. And here's the weekly time frame on Swiss yen, very much inside of the channel. So last week's bearish engulfing impulse candle, very strongly bearish, obviously. So proving that that resistance level has remained intact. So any bullish trades that were on the table were clearly kicked out very early in that reversal last week. But of course, that on the daily time frame it has showed itself to be quite a strong breakout. It came right from the top of the channel and crashed straight through first the 4 and then the 3 wave channels. So strongly bearish at the moment. All, as I say, yen strength mimicking the dollar strength here. Here's one where there is in fact a trade on the table on CAD yen, and there you can see it. So clearly advanced targeting in play here, because standard targeting would have been hit much earlier on. And Aussie yen, again, similar picture, another trade on the board. So that's almost at break even, obviously, similar to the other one. Just using our 3-step rule, so 3-6 rule. All of these, by the way, these trades are all being managed by the beta version of the Trade Manager. So you guys will see that in the production version of that when we have the bootcamp in 3 weeks' time. So so far it seems to be doing its job pretty well. Let's have a look at this one, Kiwi. And last of the yen crosses, another one where we've got significant strength. You can see this has been trailed using the 3-6 rule. That's the highest high of those 3 lower closes. It's also the highest high of the last 6 candles. So, and it will continue to be even at the close of this candle in about 45 minutes time. So almost at break even. And as I say, the Trade Manager doing its job rather nicely there. Okay, so Euro GBP, moving into our Euro crosses. You can see here, even on just the daily time frame, we had that bearish breakout that came straight back inside of the channel. So just a bit of volatility there that meant really nothing. You can see on the weekly time frame, likewise, still very, very flat. So it is technically still a trend, as you guys should know by now, because when we have a breakout, we have a potential trend, and we only deem it to no longer be trending when then there's a breakdown in that cyclicity. So we have not yet had a breakdown in this bearish cyclicity. If we do get another bearish phase 2, that would be the case. But at the moment, it's weak anyway, so it's not something that we would be looking to touch. Euro Swiss, not something, as always, that I'm really bothered with. Similar kind of picture, I suppose, just over a longer time period. We spoke about it last week, that it was one of the few pairs that was showing real directional bias. Well, that just changed completely last week after the FOMC announcement, with a bit of Swiss franc weakness against the euro, bringing it back inside of the channel. So more weakness on that, no longer possible for us to deem that a strong trend at all. EuroCAD, so here you can see that these two currencies are quite closely correlated by comparison. So more risky pairs, clearly, as in terms of what the market deems them to be. So yes, we've had a Friday bullish candle, but you can see after Wednesday, really, it just hasn't been much happening here at all. But it is testing our resistance level. So this is one that you can keep an eye out for as well, if you've got any risk budget with all the other trades on the table. But definitely not nearly as interesting as what we have been looking at so far. But do bear in mind that that resistance level, should it be broken, will potentially give us another tradable pair. Same thing goes here for Euro Aussie. So you notice that the Aussie and Kiwi really showing significant weakness, and you can see that here against the euro as well. Obviously on the US dollar and Japanese yen pairs, those are trades that we favored. So you can actually see here quite clearly that it is the Australian dollar that's the weaker of the two. And as a result, also testing this resistance level. So we did get an outside close on Friday, but then the market gap this morning was back inside. Let's see what happens through the course of the day and the next couple of days, in fact. So similarly with the Euro NZD, you can see even weaker with the Kiwi compared to the Aussie, very much outside. So certainly this is one where if you're not looking for an outside C close, then and you aren't in and you do have risk budget, I should say, then you could also start looking to trade this one. And in fact, this looks pretty much like we're getting a setup for the end of this H4 candle, but you'd have to wait and see in about 42 minutes time. So GBP Swiss, there you can see that resistance level holding. So I haven't, I've only updated this analysis obviously at the end of today's candle, but let's wait and see. Don't want to second guess the market. We did get a nice overlay here that went straight to take profit on Thursday. But apart from that, yeah, nothing much doing on these currency pairs, which are a little bit further away from the action. GBP CAD, on the other hand, not so much. We recognized last week that we had that bullish breakout. It has stayed outside of the channel. That's a non-relevant low as well, but it tested the support level a couple of times. Certainly on Friday, it retested it. Looks like we've got that continuation today. So again, anyone with risk budget on this, you may well have been looking for something to trade here. But yeah, look at this 4-hour choppy behavior. Not the nicest, but nevertheless, we've got this bullish move right now. So again, something that might in due course give us more sustained directional bias. Let's wait and see. Right, so here's the weekly time frame on GBP Aussie. We've had an eye on this, as you'll recall from our previous sessions. And yeah, last week gave us that, ring that low, gave us a bullish impulse candle, and therefore gave us reason to believe that we're into the next impulse wave, even though it didn't close above the previous wave high. That has now moved from a potential trend into an established trend, assuming this does in fact confirm itself as a phase 1 wave. So this is one of the few pairs where we've been keeping an eye on it to be able to trade the daily impulse. So if you were trading this with the hybrid approach, then you would already be in it from open of Thursday. So if you're doing that, but most of you guys are just doing the standard daily impulse, you need to obviously wait for a valid pullback and then your impulse candle before you can do anything with that. So remember, I encourage you guys to try to not chase trades. So looking to have entered at the close of Thursday and the open of Friday would count. I mean, the trade would still be working at the moment had you done that. But remember that impulse candle there, in fact, even that wouldn't have counted because Friday was not an impulse candle. So you would have been waiting for the close of this weekly candle And that obviously means that this morning for daily impulse would be the first day that you'd be looking to trade, and that's not an impulse candle. So wait for a pullback. Don't try and chase it. And if the conditions remain valid, then you can take a daily impulse on that one. So that's one that we do have at least. GBP NZD, let's also just double check on weekly. Okay, so we do have the bullish breakout as well here on the weekly time frame. So as long as you're not looking for an outside C close or a W pattern on this, then likewise, you do still need to wait for the a pullback and then your impulse candle before you go long on this. But this is certainly showing potential for continuation trading, as well as obviously our daily impulse. Right, other crosses, CAD Swiss, still not interested in that. That pathetic attempt at a breakout last week meant nothing. It could turn into something during the course of this week, but you can see how the US dollar strength just brought this back inside of the channel through the close of Wednesday and then Thursday. So we've been inside of the channel again, showing weakness as far as that is concerned. We do need to make sure that that's the right place as well. Have the if you want to trade with a strong trend, you do need to ensure that the candle closes are outside of the channel at the very least. And if you want to be even more conservative, of course, you would need to have the outside C close, which has already been violated on this one. Aussie Swiss. So if we just remind ourselves that on the weekly time frame, this is technically in a valid M pattern, but we are inside of the channel. So if you're trading WM patterns, then certainly that is valid with the C close below X in this point. But of course, it's not an outside C close by any stretch of the imagination for the channel. So depending on how aggressively you are trading, you may still be looking for something here, or even if you were, you might have gotten to something last week. But certainly just going back to the weekly again, remember, it's last week's candle that isolated and ringed the preceding candle's high. So it should only really be from this morning that you're looking for a valid entry. And Friday's candle was not valid. That's not an impulse candle. So nothing really doing here. You can see this trader has been trading this, I assume, on an H4 impulse, possibly with that outside close, and survived that long. Not entirely sure, although maybe not. So I have to check with them. In any case, they are obviously short on this one as well. Looks like it's done reasonably well. The traders survived enough to be able to trail the stop to about half of the original risk is still open on this one. So, okay. In any case, I might have looked for one of the others, to be honest, but that's okay. That's all good. Right, Aussie CAD, another one where if we just go to look at weekly quickly again, you'll see that this one we have very much got an outside C close, assuming that this does become C. So the only thing at the moment that's been on the table is either you trading this as a hybrid, or you're accepting this bearish engulfing, and it's in fact a phase one candle, an impulse candle as well as an engulfing candle, bearish of course. So if you're taking that as the isolating that higher, which in fact it could do, it doesn't always if we don't have a low that's lower than the preceding wave's low, because this could become non-relevant. But this is quite a powerful setup as a rule. I really do like my engulfing candles, I'm sure you guys know. So if you were taking that as the end of the BC wave and the start of the CD wave, as I've got it drawn in here, then certainly you would be looking, let me go to the other chart, you'd be looking potentially to short this. So from a hybrid point of view, last week we did have a setup, that weekly bearish engulfing that we ended up with, had on last week Wednesday a bearish engulfing impulse candle as well for on the daily chart. And I know that those of you who are moving forward with the hybrid type approach would potentially have taken that as a trade. Much bigger reward to risk ratios, of course. Let's see what happens with that one. Pino saying, I need a channel update on Aussie Swiss, quite possibly, my dear. Thank you for spotting that. Let me just go make sure that I'm not. Oh, yes, thank you. Well, quite right. Still on the same level, but just need to move that there. Thank you. Well spotted. Right. Aussie Kiwi. Yeah, so not really interested in this. Deep inside the channel, I know some of you spotted this as a valid W pattern last week and tried to play around with that and got bitten for your trouble. So, but Friday's candle did ring that low. That is true. But yeah, I mean, here you can see that even though this is a valid W pattern, we're tight up against this resistance level, and certainly both on Friday and then through this morning as well, it's been respecting that quite solidly. Kiwi Swiss, another one of these. Let's just have a quick look at weekly again. Okay, nothing here. I think that's the Kiwi CAD I'm thinking of. Right, so yeah, I mean, here we did have that attempt at resumption and bearish cyclicity over here. But if I'm not very much mistaken, I think in our previous discussion, we noted that it failed to do that quite strongly. So this is now going sideways in quite a tight range. So much better instruments to look at. You know, we recognize the New Zealand dollar is certainly probably the weakest of the 8 currencies that we look at the moment. And that's visible here against the Swiss franc, which is also pretty weak. But nevertheless, there's not enough directional bias and strength in this trend for us to take it seriously. Certainly not as yet. Right, Kiwi CAD. So here we have something we've obviously been talking about, this M pattern for a while now, but as an illustration of a lower quality phase 1 wave. In fact, it's not even a confirmed phase 1 wave yet. You'll see that of all of the candles in this bearish wave here, I think, okay, so last week's like just made it into an impulse candle, closes 403. Low is 4.2, yeah, by less than 2 pips. So, but nevertheless, that does count. But it also failed to break below the preceding support level. So, definitely not showing the kind of directional bias that one would look for if you were going to do well out of this. Having said that, you know, because it was technically, obviously, a potential phase 1 wave in a bearish trend, we did take a short on this previously. I think that was a daily impulse, might have been a hybrid. Either way, they're very similar entries. And we just got taken out on our trailing stop with a 2-5 rule last week, Thursday. But, you know, even though it rolled back over again and looked like it would have been nice to have stayed in that trade, you can see how here on the daily time frame, it's continuing to respect that same support level. And Friday's candle being that low test or a hammer, proving that. And yeah, well, today's still early, obviously, but so far it continues to reinforce that picture. So bear in mind, though, that I never second guess the market, and you can't say what a candle is going to look like until it has closed. Something a lot of people forget about is that a candle like that, which shows significant bullish failure, didn't look like it when the price was all the way up there. In fact, it looked more like a candle like that one over there. So you've got to wait until you get a candle close and go from there. So, folks, that's pretty much it. Yeah, I'm pretty chuffed with what our trade manager is doing on this account so far, looking pretty good. So beta version's working well. If you guys haven't yet signed up for the bootcamp that we will be starting in 3 weeks today, then I really recommend that you go and grab that link. There was a problem with the link for non-members, so we will be sending that out again. But remember, if you are keen to join us, you can always drop us an email at support@gptacademy.com. And of course, during the course of that bootcamp, not only are we going to go through all of the things that we have taught you at a deeply practical level, we'll also be, for the attendees who want us to do that, be looking at some of the newer material that we've been discussing, including where we are at with the overlay strategy, also how to trade the hybrid if you really want to do that, which it is a great way to trade, but you need to have the impulse type strategies under the belt in order to understand how they work. And also you need to have a pretty robust multi-time frame analytical ability. So you need to be pretty good at analyzing more than just one time frame and seeing how they fit together. But we will be doing more intensive training on that in the future, but we will be introducing that during the course of the bootcamp. As well as, of course, we will be launching the GoPro Academy Trade Manager, which you can see in action here on this account, which will massively reduce lost opportunity and improve consistency across the board for the traders that use them. So I've used a tool like that myself for many years that I developed, and we've now been able to transpose that into something that works with MetaTrader. So there are going to be the only people who will have access to that are people who attend the bootcamp. There is a limit to the number of people we can support for the trade manager, so please do bear that in mind. So if you're interested in that, please make sure that you have signed up and registered for the bootcamp. I'll also drop another link into the post below this when we upload the recording. And I see Karine has just dropped it into the chat box as well. Thank you very much. So yeah, the trade manager is really, I think, one of the things that's going to make a massive difference to our members' consistency, and therefore not just consistency in trading, but consistency in profitability. It means that you don't miss those trades that trigger in the early hours of the morning. It means that you don't have to get up every 4 hours to trail your stops to ensure that you limiting your downside, so that the statistical personality of the strategy, particularly the H4 impulse, which is a very aggressive strategy, so that can actually show itself in your favor. Yeah, it's one of those strategies which is very difficult to trade manually, as for those of you who are doing it manually, I'm sure have already seen. And also it takes away the need to worry about the pullback only through the night hours, because the trade manager is able to recognize any valid pullback, no matter what time of the day it is. And you don't need to worry about any of that. You just need to tell the trade manager whether you want to go long or short for any instrument on the H4 impulse. And the rest is done for you. So I will be showing you all of that, of course, during the course of the bootcamp. And as I say, that's 3 weeks today it starts, guys. 3 days of intensive training with me, taking everything that you have got in the academy and learned at a practical level, and looking at applying it. Well, you've learned it at a theoretical level and applying it at a deeply practical level. You're welcome, Gary. All right, so guys, there's also the non-member link, I think, coming through in the chat, but we will also paste it in the recording to this, both on Facebook and on YouTube. So do keep an eye open for that. And guys, if you got any questions on what we're doing here at the moment as well and what I've covered today, please remember to just drop that into the comment section as well below this video. All right, guys, all happy? Let's hope that we do get a sustained directional bias on the higher time frames coming out of last week. I'd never second guess that. There's no point in second guessing anything. But if we do get that, it'll be really nice to have more daily impulse trades coming onto the table, and also helping you guys accelerate your pathway to that $2 million funded account. You're welcome, Dina. Guys, thanks very much. We will be chatting again later in the week. Look out for announcements for further training, and I'll talk to you then. Bye for now.